Going to get over to Contessa Brewer because she's got a story on this. Gambling's biggest luminaries coming together this week in Las Vegas. Contessa Brewer is live at the center of it all. She joins us now with a special guest. Good morning, Contessa.
Good morning, Andrew, and welcome to Las Vegas. Look, Caesars has a lot of news. They just announced new buybacks, a new $1 billion in debt offering, and Tom Reeg joins me bright and early here in Las Vegas. It's nice to see you. I'm just curious how much your share price had to do with the stock buyback, and why does it take that kind of news to juice the stock of a company that has been performing on all cylinders?
Yeah, Contessa, to go back, we closed the merger with Caesars in July of 2020. We all remember it was a different world then. We had a significant capital spending program that we stepped into when we bought Caesars. We had $400 million we needed to spend in New Jersey. We were building an expansion in New Orleans that opens 2 weeks from now that was $435 million.
In time for Super Bowl next year.
That's right. And a new property in Virginia that's over $800 million that will open before the end of the year. As we were reaching the end of that cycle and looking at what was happening with free cash flow and where our stock was, it was an easy decision to start to buy some stock. In terms of where the share price was, we were on the wrong side of the macro trade while the Fed was raising rates. We're a levered company coming out of a merger, and now that the Fed has moved into a cutting cycle, we've seen a turn in our stock.
You also just made a deal with the union late last year that gives the biggest pay hike that your employees have ever seen. You've got casinos all over the country, the biggest operator in terms of number of properties in the United States. What are you seeing about the American economy and where customers are, that discretionary income might be a concern?
Yeah, I'd say we're about the purest measure of consumer discretionary given the business that we're in. And it's been remarkably resilient. We had the kind of a bubble when stimulus checks went out, and that faded a little bit as that money was spent. But the consumer remains quite strong. Here you see here in Vegas, I'm sure this week the market is packed. We're running at 99% occupancy year round. The regional business is holding in well, and the digital business is growing incredibly strongly. So we've got a business that did $2.9 billion of EBITDA combined coming out of the merger that's doing about $4 billion now.
Okay, first on Las Vegas, Wells Fargo said its Las Vegas F1 room rate tracker took a turn to the downside with average daily rates down 40% year over year. Is that an indication that there's not enthusiasm over F1? Is that what you're seeing?
I'd look at it more as an indication of garbage numbers. They're measuring really what's 8% of our room base in terms of where rates were. Last year, it was well known that we held rates very high coming into the race, and they dropped as it came. What we learned last year was we needed to fill sooner, so we're not holding rates as high. If I look at, F1 for us, it was a lift last year of almost $20 million versus the weekend the prior year. This year, I would say, flat to up or down a few million bucks versus last year, but up the 20 versus 2 years ago.
And you mentioned the digital business. The powerhouse in this space is FanDuel, and DraftKings coming in a strong number 2. And then there's this fight over the third and fourth positions. How important is it to you? You just launched a new online casino app, Horseshoe, yesterday. How much is this important to the growth of Caesars business? And can you make an impact? Can you grab market share away from the two big players?
Yeah, well, Contessa, I'm old-fashioned. I like to make money. So I measure it based on how much money we're making, not how much market share we have. So our promo spend is a third to a half of what DraftKings and FanDuel have. So those subsidies don't run through our GGR market share numbers. But we've got a business that's approaching, soon will exceed 20% EBITDA margins in a business where most are still losing money.
Before I let you go, we're keeping an eye on Florida and Hurricane Milton. I know your home is in Florida. How are things looking for you? How's the situation for you being here and watching that storm approaching?
It's deja vu from 2 years ago. I was in Vegas watching Ian hit our home 2 years ago. This storm seems to be tracking north of us, but we'll still have to deal with surge, and you should pray for anybody that's in the middle of this. It's awful to go through these, and after the news cameras leave, a week or two from now and go to where the next storm's going to land, the people where it hits will have to deal with this for the next 5 or 10 years.
It is a monster going in. Tom, hoping the best for you and for your family, too. Thank you for being with us early this morning on Squawk Box. Andrew, I'll send it back to you.
Thank you. Enjoy Vegas. What stays there, well, doesn't stay there.